Good day to you. Clive Morn, CliveMorn.com here. I want to start by thanking all new subscribers and existing subscribers for your support and your interest in both my website and these YouTube videos. And in this update, first of all, I'll start by stating that the date is Monday the 24th of November. Now, in this update, we're going to look at the reasons for a potential heavy correction in gold and silver, which is related to what we're seeing in the dollar. Now, we'll start with a 7-month chart for silver, on which we can see a very clear double top. Now, a big reason for silver correcting here, even if the broad market were to hold up, and even if the dollar went to rally significantly, would be the very large gap between the steeply rising 50-day moving average and the 200-day moving average, which is shown by this double-headed red arrow. That alone makes a significant correction more likely. Now, what we want to be clear about here is that we have to stay on the defensive unless and until silver breaks above a resistance at that double top. We have no choice but to remain on the defensive, because you're not going to miss anything. If you're on the defensive here, or either you step aside or you hedge or whatever, you are not going to miss anything, because the gap between the current price and the resistance is not great. So in other words, you just take the view, well, if it doesn't get above that resistance, I'm going to stay cautious and be ready for a drop at least back to that buyback zone and that strong support. Now we're going to move on and take a look at the broad stock market, which is starting to look decidedly frail. On the 7-month chart for the S&P 500 index, you can see that it's been rounding over beneath a huge dome formation, which actually started to form way back in May. And unless and until the stock market can break above that dome, the outlook is bearish to potentially very bearish. And if that support shown on this chart fails, the stock market could plunge. Another point to note is that even though the market crept higher for several months, it looks a lot of investors saw it creeping higher, making new highs, and thought, oh, that's good, it's just going to carry on up. But if you look at the bottom of this chart, where you see the MACD, which is showing the momentum, you can see that the upside momentum, has been steadily fizzling since as far back as May. So which is warning that the thing is rolling over, and as we can see, it's rolling over beneath this dome pattern, and is getting close to a potentially serious drop. So the situation here is very clear. Unless and until it breaks out above that dome, we will stay on the defensive with regard to the broad market and on the defensive / bearish, shall we say. Now we'll move on and see that there are similarities between this chart for the S&P 500 index and a chart for Nvidia, which is also rounding over beneath a giant dome pattern. I regard this as a potentially very bearish chart, particularly given what happened when it released its stellar results last week. When it rose, the bag holders bought on those results, thinking, oh, it's great results. And of course, that rally on the results was immediately sold into, which is why you had that reversal day last week. I bounced back on Friday because of along with the broad market, because of the Fed making noises about possibly dropping interest rates. But words are cheap, and maybe it'll happen, maybe it won't. But again, just like the S&P 500, unless Nvidia breaks out above this dome, we will adopt a cautious / bearish tack with this. Now we're going to move on and come to the big reason why the precious metals sector and metals generally look set to correct back hard. Possibly, it could be a pretty substantial correction, because if we look at this 16-month chart for the US dollar index, we see that it has broken out of it's just in the process of breaking out of a double bottom And this advance was called about a month ago on ClydeMorn.com in an article which will be linked below. So you can see for yourself that this drop, this rally in the dollar was called in the middle of October, I think. And it looks, if the dollar continues to advance, it's only got to break above that nearby resistance, and then that will constitute a breakout from the double bottom. And then it should advance as shown, which will quickly lead to a bullish moving average cross. So this could be a bigger rally than we had earlier expected. And gold and silver have been added to this chart, gold at the top and silver at the bottom. So if you can see for yourself how they will probably drop in the event of the dollar rallying, because you've got the silver double top, which is not so obvious on this chart, but gold also looks vulnerable at the top of this chart. So now we will come to a related chart, which is what assisted me in determining that the dollar would rally, which is the chart for the US dollar index bullish fund for the same time frame, 16 months. And you'll see that, about a month ago, I spotted that it was making this head and shoulders bottom, but also a big giveaway. And a reason for using this chart is because it shows the volume, and not just the volume, but the volume indicators. And as you can see on this chart, the accumulation line has been strong relative to the price, which was a sign that the dollar was getting ready to rally. And this being a proxy for the dollar, of course, this UUP advanced as well. And with this chart, we can see that it's already broken out of its base pattern, and it's already had a bullish cross of its moving averages, which is a circumstantial factor suggesting that the dollar is going to continue higher. Now, lastly, we'll take another look at the chart for silver, the 7-month silver chart, just to remind ourselves about this double top that's formed over the past, since mid-October, and how vulnerable it is to continued dollar advance, because it suggests that it's going to come down from the second high of this double top and head down at least to the buyback zone showing the strong support, which will be valid provided that the broad market holds up. If the broad market goes into the abyss like it did in 2008, then probably silver will head a lot lower, because it will be a case of the baby being thrown out with the bathwater, as everything will be sold indiscriminately due to margin calls and general financial distress. So whether that strong support shown there in that buyback zone holds will depend on what happens to the broad market. And so we will review it at that time when it gets there. I say when because it looks highly likely, although there's no guarantee of anything in this business, but it looks like that's going to happen. So anyway, I hope you found this reasonably interesting, and as I say, thanks to all new subscribers and existing subscribers for your support. Thanks for your interest in the YouTube videos, and if you want to join us in following these developments, and in particular, we will be looking at some strategies to make money on the short side as this thing drops, And so if you want to join us, and then we'll also organise or line up the best gold and silver stocks for when the recovery comes. So if you're interested, come over and join us at ClydeMorn.com. So that's all for now. Look forward to seeing you soon. Goodbye.